net worth of $50 million. Did you see what I did there? Yes, I equated your net worth with your network and your skill of networking. Exactly the point that I want you to get. So, in wrapping up the series, I'm going to share with you the 6 secrets to networking success pulled directly from the playbook of Nozad. Exactly what he did to
Well, good afternoon, everyone, from wherever you are joining us. And for some, I know it's good morning or good evening. Thank you for taking the time to be here with us. This is the Commonwealth Businesswomen Network in Kenya's weekly webinars or discussions that we host every Wednesday from 1 p.m. to 2 p.m. Very delighted to have you all here. So as per the norm, we are going to start off with a quick word of prayer. So let's all bow our heads. Our dear Heavenly Father, we thank you for your promise to be with us at all times. And we thank you for this beautiful day as we are all assembled here for another one of our impactful discussions. We ask you for your presence, we ask you for your guidance and your blessings as we start our session. Continue to inspire our thoughts, all our discussions, our ideas, as we seek to grow and flourish in our businesses and also in our personal lives. And we pray, trusting and believing in Jesus Christ our Lord. Amen. Well, welcome once again, everyone. Some of you, I know you're here with us on Zoom. Some are joining us on Facebook. We are thrilled to have you. If it's your first time on our platform, karibu sana. If you're one of our regulars, it's good to see you all. Now, at the beginning of this year, we all woke up to the news that there were these new taxes being introduced. There was the minimum tax and there was also the digital service tax. And of course, that was met with mixed reviews. Some were happy about it, some were not very, very happy about it, as we're all trying to understand what are these taxes about. But today we are going to focus on the digital service tax. This was effected on the 1st of January of this year, and it is actually 1%, 1.5% of what is considered the gross transactional value, meaning the services, the value of the services that you render as a business person online, that is what is being charged. I know there's been a lot of confusion. Am I being charged for the goods I'm selling? Am I being charged for the profit I'm getting? Anyway, we're going to get more clarifications on the same. Now, from what I've understood also is the fact that we live in a digital era. This is where we are right now. And, this is the way to go. We're not going back. And so a lot of businesses have actually moved to the digital platform. And actually we've gotten to a place where now we have the content creators, the influencers who actually get paid to maybe advertise products online, and they actually earn an income from that. So I'm pretty sure that, from that KRA, our authority here in Kenya, the Kenya Revenue Authority, so it was that, we have to support the National Revenue Kitty, so we might as well charge the taxes for the same. And a lot of other countries have implemented the same, because I know about Tunisia, they already have that in place here in Africa. And other countries like, I know Ghana, Tanzania, they've been in discussions to get it in place. So considering e-commerce is on a steady rise here in Kenya, this particular tax is quite timely, and the tax paid, as I said, is going to greatly contribute to the National Revenue Kitty. With that in place, so many questions. I'm sure a lot of us have so many questions to ask today. We have our expert. We want to know who is subject to that tax, what is the scope of what is being taxed in the first place, what are the penalties in place, and as I said, is it charged on the goods sold, on the profit, or just the services rendered? We will get to have answers to all those questions shortly. As I mentioned, this is hosted by the Commonwealth Businesswomen Network in Kenya. And to tell us a bit about the organization and also to give the welcome remarks, I would like to introduce our chairperson, who is also the Commonwealth Businesswomen Network International Chief Operations Officer. This is none other than Nana Wanjau. Nana, karibu sana.
Thank you, Susan. Can you confirm if you can hear me?
Yes, I can.
Excellent, excellent. So I echo Susan's sentiment of welcoming you to Commonwealth Business Women Network Kenya, where we welcome you by saying karibu sana and jambo. In our usual style, we will continue to encourage each other to keep social distancing, washing those hands frequently, and of course, wearing those masks. The Wednesday weekly program has run for over a year. I mean, it's a powerful flat platform. This is a space where we come weekly as business owners, as employers, as entrepreneurs, even as employees, to nourish, to educate, get ourselves educated, to get ourselves reminded because we do forget. We also get ourselves challenged on this platform and even provoked beyond our comfort zones. So it's a space that we truly, truly value. I encourage you to block it off in your calendar every Wednesday, 1 p.m. East African time. So first of all, let me start by saying who we are as Commonwealth Business Women Network Kenya. We are a ground partner of the Commonwealth Business Women Network, CBWN. CBWN was originally established by the Commonwealth Secretariat and the Commonwealth Business Council in 2002. CBWN is now an accredited organization and community interest company directly recognized by 54 governments across 6 continents. We are committed to advancing the UN Sustainable Development Goal number 5 and the Commonwealth Charter. CBWN, we are focused on encouraging, enabling, and embedding women in leadership and women's economic empowerment through our work in talent, training, and trade. Talent, training, and trade. We say you access trade through training talent. So indeed, we are on a mission. We have a mission that is divided into 3 parts: strengthening the Commonwealth, building businesses, and advancing women. You may ask, why strengthening the Commonwealth? For you and I as business owners, the Commonwealth is home to 1 billion women. 1 billion women. This is a network that is available to us to access, to connect, collaborate, and do commerce. And that's what we are here to do. Another reason our mission is to strengthen the Commonwealth is because we have what we call the Commonwealth Advantage. The Commonwealth Advantage is it costs 20% less to do business, to trade between Commonwealth country and Commonwealth country than it does to trade with a non-Commonwealth country. I'll repeat that because you can take that to the bank. It costs 20% less to do business Commonwealth country to Commonwealth country. And of course, our mission again is to strengthen the Commonwealth, build businesses, and advance women. And we are ably doing this through our weekly, monthly, annual programs. And I'll share with you the upcoming programs so that you may diarize and ensure you do not miss. We have the inaugural Commonwealth Women Entrepreneurs Summit. The inaugural Commonwealth Women Entrepreneurs Summit that will be coming this May, a 2-day summit, May 19 and May 20th. Find this on all our social media platforms and in the newsroom and our website. Go and sign up for the 2-day summit, which is also free. Secondly, we have CHOGM right around the corner. CHOGM is the Commonwealth Heads of Government meeting, June 20th, which will be hosted by President Kagame in Rwanda. The details of how this year's CHOGM will run are still coming in. We shall keep you updated through our online platforms, but also on this platform every Wednesday as we gain clarity on how the CHOGM meeting will run. But one thing you can diarize, and we are sure as Commonwealth Business Women Network, we will be hosting the biannual awards that we always host along CHOGM. They will be hosted around the 20th of June. Watch out for that, and I will keep sharing details as they unfold. The Commonwealth Business Women Network Awards will be around June, around the CHOGM events. Finally, and most excitedly, is the Commonwealth e-marketplace. This is very exciting because it's going to be part of the Commonwealth Women Entrepreneurs Summit. The Commonwealth e-marketplace currently has 500 exhibitors and growing that have come from 3 continents, 500 exhibitors across 3 continents and growing. We are targeting at having representation from 6 continents. 45 categories of products are currently under exhibition. Now, why do we want to expand the exhibition to 6 continents? Because we want the Kenyan business women to be able to connect, collaborate, and do commerce across borders, across the continent of Africa, and across the continents of the world. It is Robert Kiyosaki who said, "The richest people in the world look for and build networks. Everybody else looks for work." The fact is, 80% of business opportunities are filled through networking. So the Commonwealth e-marketplace, which is a free platform, is a platform where the Kenyan business women can log in, register for free, and immediately have a network that's spread across 3 continents currently, but growing to 6 continents. Now that is value for your money. You do not want to miss that. I'm very excited as we talk about the e-marketplace. You can see that the conversation of today is extremely, extremely timely as we talk about the digital service tax. A lot of our exhibitors are watching us on Facebook Live because they want to know the nitty-gritties of what the government of Kenya has in place when it comes to income tax, when it comes to VAT, because the business women across the continents are going to be trading with Kenya. So this is indeed a very, very timely topic, and we are very excited that the Kenya Revenue Authority, Domestic Tax Department, represented by Miss Hakamba, are here to educate us on the details, on the requirements, on the conformity of the digital service tax. I want to thank Susan and her team who've put this together. Susan, thank you so much for putting this together, and I would hand this back to you. Thank you.
All right. Thank you very much, Nana, for those welcome remarks and also for the invitation to all the programs that we have coming in, and especially the e-marketplace. Yeah, we'll be posting the details on the same if you want to be able to get to know how to join in. We'll be sharing the links on the chat box. So moving on.
We have disturbance, yes.
All right, better now. Right, so moving on with our program, I would like to invite another member of the Programs and Trainings Committee to give us, sorry, my apologies for that. Let's see if we can mute everyone. Sorry, our apologies for that. All right, much better. Yes, sorry about that. I would like to invite another member of the Programs and Training Committee who's going to introduce us to our guest this afternoon and also welcome her to start the presentation. So Rose Nginja, karibu sana.
Thank you very much, Susan. Quite a great beginning. At least we have an idea of what all this is about. I take this opportunity to proudly introduce to you our guest today. She's Hakamba Harusi Wangwe. Hakamba Wangwe has a strong background in tax administration and project management, spanning over 18 years work experience, all at the Kenya Revenue Authority. In line with KRA's mandate of offering efficient tax services by leveraging on technology, she has made key contributions towards development of several key automation initiatives in the domestic taxes department, namely iTax, tax invoice management system, and digital service tax. She is the Chief Manager, Domestic Tax Department, in charge of tax invoice management system, that's TIMS, and the digital service tax, DST, implementation. She also plays a supportive role in the ongoing initiatives geared towards the establishment of a framework for the taxation of digital economy. Hakamba holds a bachelor's degree in economics from the University of Nairobi and a certificate in tax administration from the Kenya School of Revenue Administration. She's also a certified Prince 2, that is Agile, and MSP, that is Managing Successful Programs practitioner. Hakamba, you're welcome to this session, and you're particularly welcome to be a member of Commonwealth Business Women, so we can benefit from your talk today and future association with you. Karibu sana, the floor is yours, Hakamba.
Thank you very much, Madam Rose. I hope you can hear me. Okay. I'd like to thank you for giving us this opportunity as the Kenya Revenue Authority to come and share the information that we have for the digital taxation of the digital economy. Taking this opportunity also to thank my colleagues. We are here with some of my colleagues in this meeting for attending with me, and they'll be playing a supportive role when we are going through this presentation. So even as we go through the presentation, we'd like to ask so that we maximize on this opportunity and take in as much as possible in form of questions. If we can utilize the chat facility, it would be nice so that we answer as many questions as possible in view of time. That said, I would like to thank the Commonwealth Business Women Network for availing women like me the opportunity to be able to get the support they need when it comes to business, and also giving them these lunchtime forums for them to be able to gain knowledge in areas that they're interested in, so that they can be able to further their businesses. So I'd like to thank you for that. That said, if you allow me, I'd like to request one of my colleagues to display the presentation. Even as we do that, I'm going to switch off my video so that you can be able to focus on the presentation. I'll be back during the Q&A session. Thank you. Okay, perfect. So even as we go through this presentation, we need to recognize the role business plays when it comes to the tax policies that we have to develop every year or maybe periodically. And basically, when you're talking about tax policies, we are looking at how business is evolving. You have to agree with me that what we had in business opportunities in 1970s is not what we have right now. There's been so much development that has come about as a result of the advance in technology and basically the developments in the business world. And with that, even as a revenue authority, we've had to also evolve so that we are able to take care of the business needs of our jurisdictions and make sure that the government is able to collect the revenue that is supposed to be collected. Next slide. So, next slide. So for this presentation, we basically I don't know, on my end, I've not moved to the next slide, so I'm wondering. Okay, there you go. So for this presentation, we are going to basically just cover the areas of interest. We're going to see what background we have when it comes to digital service tax and the digital VAT on digital marketplace supply. The reason why we are looking at these two separately is that we have to look at the legislation that is covering these two taxes. They are two independent taxes, but sometimes people confuse them. So that's why we always have to bring them in so that someone can be able to see the distinction between DST and the VAT on digital marketplace supply. We'll see who pays, who it applies to, both of them, who pays for them, any exemptions that we are expecting, especially for DST, and roughly just shortly cover some of the questions that people normally ask when it comes to taxation of digital economy. Next slide. So when you're looking at the, I think Susan alluded to it, that the availability of internet has made it possible for people to be able to explore a lot of avenues, business avenues when it comes to e-commerce. This chart you're seeing here, it's actually giving us statistics every minute of the day in 2020. What statistics were gathered? 41.6 million messages and shares were done on WhatsApp. We're going to look at the very big figures. We are looking at people who are trading on Amazon, about 6,659 people on Amazon per minute. Instagram, when you're looking at Facebook, the messages that are going out on Facebook, 150,000 status updates on Facebook per minute. So when you're looking at such statistics, the bulk of such statistics and thinking, based on these statistics, we've seen that there's been a growth on basically the use of the internet. From 3 billion people in 2014, in 2020, we have 4.5 billion people who are internet users. So just see that growth. And that growth has helped us, because what happens is that with the world changing, every click, every swipe, every share, why we have forums like the Commonwealth Business, Women in Business, is because we are looking at such opportunities that are coming up as a result of the availability of the internet, and being able to create the forums in which to be able to exploit them. Next slide. In Kenya, we've not been left behind, especially over the last few years. We'd actually basically be talking about, we'll be talking about the last year, 2020, 2021, because of the situation we found ourselves in. Unfortunately, with the coming of the pandemic or the COVID situation, we found that most people, like right now, we are being encouraged, if you can be able to work at home, please work at home. Now, businesses had to think, now, if people are working at home, how do we reach our market? Because they are not going to come to us anymore. These people are going to be in their homes, but then they would like to consume a service, they would like to consume a product. How do we reach it? So we found in the last 2 years, we had to to come to this situation whereby the businesses had to be more innovative. We've seen even medical services actually going online for some of the facilities so that they can be able to reach their clients wherever they are. And this has been made possible basically with the, again, technology. We are looking at the availability of the internet. We are looking at the availability of the mediums with which we use to interact with people, the phones, the tablets, the computers. And in Kenya, basically, it's one of the countries that have actually amassed a presence in technology. And we have statistics of 17% of our population being able to use the social media and having platforms like Facebook, WhatsApp, Twitter as the most widely used platforms. And these platforms, you and me know, they are enabling us to be able to interact on as far as e-commerce is concerned. Kenya has been fortunate, and we've been able to share our technology with the world. The use of mobile money, that we can send money from one place to the other, interact. Sorry, someone is asking if, are we able to maximize this presentation? Sorry about that.
Hakamba, it needs to be on a presentation mode.
Presentation mode, yes. Caroline, please.
No, there's somewhere to click at the bottom of
yes,
the left.
Yes. Sorry, Hakamba, this is actually what I was communicating on the chat box. On our end, we've blown up the presentation, but it's only coming in this view.
Can you, there's a button you can click at the bottom so that you
on Zoom.
Yeah, or not on Zoom, on your document.
Yes, that's what we've done, but unfortunately it is not projecting that way on your
Are you able
screen.
to zoom? Just zoom.
All right.
Zoom there.
You could zoom.
Yeah.
Not so much, eh? Okay.
Yeah,
is that better?
Yeah.
No, more. Are you at 130?
Yeah, I think that's okay.
More, a bit, 130? Is that better?
Yeah, definitely better.
Sorry about that.
Thank you.
So we were talking about mobile money. Sorry about that. Sorry. And how it has helped us be able to revolutionize how Kenya is defined in terms of business and providing the alternatives for payment modes compared to the traditional means. Again, in the past year, we saw with the pandemic, we were encouraged more and more to try to use mobile money to limit the use of cash so that we minimize the spread of COVID. So with this, as the Revenue Authority and like many other jurisdictions, again, I thank Susan because she did have my presentation. Most jurisdictions in the world are moving towards considering the approach that we can use for taxation of the digital economy, basically to widen the tax base and be able to generate additional revenue. Because with the advent of technology, of course, we started missing out on some of the revenue that was coming from the traditional platform. So it was important for us also to move to this space and see how best we can maximize on it. Next. So when we are talking about the legislation that is governing the digital service tax, we have I think it's a digital marketplace supplies, the VAT on digital marketplace. I think we skipped some slides. Interchanged them.
No, Hakamba, this is okay.
Okay. So for VAT, we have the parent law, that is the VAT Act 2013 and the Tax Procedures Act, that is giving us the mandate to be able to collect VAT from the digital marketplace. In the Finance Act 2019, there was an introduction of the VAT on supplies made on the digital marketplace. That's what is governing the VAT on digital marketplace supply. And then we have the law that is governing DST, that is the Income Tax Act. Again, the Finance Act 2020 is the one that actually made it effective January 2020 for us to be able to start collecting DST from the digital marketplace, on services offered on the digital marketplace. And we also have the regulations that also were gazetted in December 2020 that was supporting this legislation so that people know how to do this. Next slide. So DST, I'll go to next. So DST basically, now we are going to break the two tax heads separately. We have VAT, you remember, it's from the VAT Act, governed by the VAT Act. And then we have DST, governed by the Income Tax Act. So DST basically is charged on income that has been derived or accrued when one person provides a service through a digital marketplace in this country, and it's effective 1st January 2020. And how it's calculated, it's charged on the gross transaction value of the service that has been offered. Now, in two aspects, please note, we have if a person provides a digital service, the payment he receives from this digital service, or as a consideration, it might be the commission, it might be the fees that he charged, then that payment he receives for this service he's provided, we'll see later which kind of services these are. Or if one person provides a platform on which business people, buyers and sellers, can be able to access that platform to be able to purchase goods, then for the use of that platform, which he is charging a fee for the person who is selling, then that fee he charges for the use of that, we are calling it a digital marketplace, then that fee is actually subject to DST. And DST is subject to, is subject for on both residents and non-residents. So for residents, we know that we have our people who are registered in Kenya as taxpayers, and then we have non-resident persons who have permanent establishment, who are also registered in this country for purposes of declaration of taxes. But for these two categories, whenever DST applies for the services that they're providing on the digital marketplace, or for offering a digital marketplace so that buyers and sellers converge for business, then they will be charged, they will be liable for DST, digital service tax, but the difference is that this for them is an advanced tax, and it will be offset against their tax liability for that year of income. So for example, if you incur DST like in 2021, we're in 2021, when you're filing your return in 2022 between January and June, then you can claim, you can use the credits that you incurred in the course of the year as you paid DST. You can use them as a credit and offset against your liability for that year of income. And then we have another category of that we have introduced, and really we were targeting this category because it's the category that was not factored in. We have the non-resident persons without permanent establishment. In the first slide that I showed you, the platforms we find ourselves interacting in, that there's business going on, there's income being earned. Most of these platforms are non-resident persons without permanent establishment in Kenya. And for these ones, we only thought that it is fair for them to pay a portion of the income that they're earning in this country in taxes, so that they leave it here. They have earned the income from our residents, therefore they should be able to leave some of that income, 1.5% of it, in this country. And for this category, that will be considered a final tax. We've talked about that law. We can go to the next. So when we are considering VAT on the digital marketplace supply, someone will be wondering, I'm registered, I'm a business person, I'm registered for VAT. Does it mean I'm also being charged on the VAT on VAT on services that I'm providing on the digital marketplace? Now, to answer that question, VAT applies to business to consumer services that have been supplied through the digital marketplace by a person from an export country to a recipient in Kenya. That means the services, if they're being provided by someone who is a non-resident with no permanent establishment to a recipient who is located in Kenya, but this recipient has to be a final consumer. So that's why we are talking about B2C services. Then they are supposed to remit or to do a self-declaration and remit the VAT on digital marketplace supply. And when it comes to B2B, that is business to business transactions, then we already have provisions in the law for reverse VAT to apply. So that's why we are talking about B2C services, because B2B were already covered. Business to business transactions had already been covered in the law because there has always been a provision for reverse VAT. But in the event the person who is receiving this service in this country is a business, when they are receiving that service, they need to notify the supplier, that is the supplier from the export country, that they should not charge them VAT for that supply, as this recipient will be responsible for accounting for the VAT that will be that will be due thereof. So when you're talking about export country and import country, we also have to determine how do we know who is the user that is located in Kenya, because we've kept talking about a recipient who is in Kenya. So both GST and VAT, we had to come up with guidelines that will indicate whether that user or the person who is receiving that service is in Kenya or is not in Kenya. So the next 4 points are actually guidelines, so that if most of them check out, then we'll determine that this service was supplied in this country, and therefore the DST is chargeable or VAT is chargeable. So when someone, when they're doing their payments, when the payment is made using a credit card or a debit facility that is provided by a financial institution in this country, then we will consider that person who is receiving that service to be someone who is a recipient in this country. Or if he's using a computer, the IP address, the computer or the tablet or the mobile phone, the user, the access is being made from this location. Or if the supplies or the digital services are acquired using an internet protocol address that is registered in Kenya, or the international mobile phone country code assigned to this country, or if that person's business or residential or billing address is in Kenya, then we'll consider that supply to actually have happened in this country. As I mentioned earlier, you can go to the next slide. These are just guidelines so that we can be able we might not have some kind of like ambiguities. So the digital services, the scope of the digital services and supplies. When we're talking about the digital marketplace providers, we have talked about it. We've said that it's a person who provides a platform that converges both buyers and sellers of goods and services. And once they converge like this, anyone who is selling, perhaps if they have to display their goods on that platform so that a buyer can be able to access and they get the market that they need. If this seller has to make a payment to this platform or make a payment for or a fee to this platform for use of that platform, then that service, we call it a service. Actually, it's a service that is being offered like any other service, and it's subject to DST. What I'm saying that if that person has to make a payment, we have instances where someone like maybe a company just has two platforms. Basically, there's the traditional platform of business, and then they have the online platform where you go to their website and you still find their goods displayed there, and you can make a purchase as long as they are not charging for it, because they will not be charging for it. They've just diversified the way they're operating. Then that will not be subject to GST, because it's just another medium they're using to conduct their business. So when you're talking about digital services, among others, if the service that you're offering is not in this one and is not in the exemptions, then you need to consider that it should be included in number 2, because if it's not in the exemptions, then it's in number 2. So we are going to say others in the end, but when you're providing apps, ebooks, movies, the downloadable digital content, if you are providing streaming digital content like TV series, music, podcasts, software programs, if you have the firewalls, the web filters, we have some of our platforms that whenever you access such platforms, especially the ones that have very high traffic, then they're also holding a lot of data. So what is happening is that the business people approach them and they ask if they can use some of this data so that they can come up with products that are aligned to some of their users, so that they can be able to sell more. So these platforms usually share that data, but at a fee. So if they're monetizing on data, these platforms, then these are subject to GST. Subscription-based media, we've seen some of our newspapers have moved to the online platform. You pay 20 shillings, you get the e-paper. That too is subject to GST. Web hosting, cloud storage, online data warehousing, e-ticketing and booking. If you have a customizable search engine, we have Google, for example, they fall in this category. We have online distance learning. If you pre-record your training package, and then for people to access that package, they have to pay you something for them to access that package, or you provide a platform that allows people to be able to come and learn, and you charge a fee. When you have, for example, I see some of the exercise videos, some of them have, they're given a platform that if you make a payment, then you can access that platform and take part in the exercise schedules. Then these are also subject to GST. And of course, we said any other service provided or delivered through an online, digital, or electronic platform. So with that, I think we've given you a background of basically what GST is. We have mentioned that you have to register for you to be able. We have already our registered taxpayers that can be able to access. Next slide, our iTax platform. So once you register, what provision we've provided also for the non-residents is they too can also register and access iTax. So we are calling it the simplified registration platform. So for DST, basically they just need to register, and then once you access iTax, next slide. It's very simple, really. You're just making a declaration. You go to payment registration. You just pick payment registration, next slide. And when it comes to payment registration, of course, some of the areas that have been blacked out is areas that are actually auto-populated. So there's nothing much that you need to do there, but you need to say that you are filling in an income tax payment, you are registering for an income tax payment, you have provision for digital service tax, and the only thing that we are requesting from you is the monthly turnover value, and the tax rate is 1.5%, and then you submit. Of course, you know our payment slip, you make your payment to the bank or a mobile money payment, and we also have provision for credit cards, debit cards, and also for SWIFT transfers. Now, the due date for this tax is 20th of, it's like VAT. Also for VAT on digital marketplace supply is 20th after the month which the transaction took place. So that means if you're making a payment for your April transactions, your tax will be due by 20th of May 2021. So that's what it means. The exemptions. So I mentioned that if your services are not in the category that are displayed, then they'll be in exemptions. And if they're not in exemptions, then we are calling them any other. So the exemptions, please note, DST does not apply to tangible goods sold online. That's the biggest complaint that we have received so far, that we are charging DST on goods. That is not true. So DST, the person who is selling goods might need to access a digital marketplace. The fee that they pay on the digital marketplace, the person who is hosting those goods is the person who is liable for DST, not the person who is selling goods. So tangible goods sold online are not subject to DST. If you have cable TV, for example, the person who supplies a cable TV, who is a non-resident, most of you have DSTV, for example, it's already being charged under Section 9(2) of the Income Tax Act, so it's exempt from DST. And then any services that are subject to withholding tax, professional management fees, royalties, winnings from bettings, all of them are under Section 35. If any of the services that you offer are under Section 35, then DST does not apply because they have been taxed elsewhere. If the government provides a platform so that citizens can be able to access their services, like eCitizen, you're very familiar with it, Teams, then DST will not be affected in that case. We have services that are offered by certain bodies that have been specified in the first schedule of the Income Tax Act. Again, we have government bodies, Tea Board of Kenya, Kenya Dairy Board. If they have the online platform for their members, then these will not be subject to DST. And then now financial services. We have services that have been specified under the fourth schedule, and then financial service providers that have been registered by the CBK. So this will include the banks, will include SACCOs, insurance companies, payment service providers, all fintechs, any services they are offering then will be exempt for DST. So coming to the end of this presentation, I'll just have a brief run through of some of the questions people ask. I may have touched on them, in which case I won't dwell on them. If DST applies to goods sold online via websites or social media, we have said it doesn't. It only applies to digital services. When did DST come into effect, and is there a grace period to comply? It came in effect 1st January 2021, and no, there's no grace period, but then since it was specified in the Finance Act 2020, then from June to January, it gave the taxpayer 6 months to be able to put measures in place and be able to comply. And the rate is 1.5%. Next slide. And it's due on a monthly basis. We mentioned that. I'll go to number 5. If I provide digital services in Kenya at a fee, should I include the DST of 1.5% in the customer's invoice bill? This is a very critical question because we're having instances where we are seeing some of the digital service providers or the platform providers communicating to their clients that starting May, we'll have 1.5% of DST. It's not supposed to be an end consumer tax. It's actually being charged on the person who is offering the service. So it is the responsibility of the digital service provider to account for the DST from the income that is being earned from provision of this service. And when you're considering the gross transaction value, the 1.5%, please note, this does not include the VAT charged for the service. So please note, when you're talking about the gross transaction value, you're actually talking about the taxable value that you come and load on the 1.5% or the VAT that is due. So it's not inclusive. Next slide. So we have already mentioned that if you have already been deducted withholding tax, then DST shall not apply to income that has been subjected to income tax. And no, for residents, DST is not an additional tax to their usual liabilities. We already mentioned that it's actually an advanced tax, which means that when you're filing your own annual return, you can actually include the advance credits in your return so that you can be able to get credit for that payment that you made. And lastly, the penalty for not filing DST. We have, of course, the penalties were already in the law, so this is not new. We are all familiar. we saw that for DST, it's a payment return. So whenever you have transactions within that period of time, then you just do a payment return. If it follows that whenever you don't have transactions, then you don't have to do a payment return. But then if you had transactions and you did not submit them, then it attracts a penalty of 20% of the tax that is due. You will be penalized, and the interest charged is 1% per month. As much as we talked about the VAT on the digital marketplace applying to both B2B and B2C, but B2C, sorry, we said B2B is covered by the reverse VAT. DST, on the contrary, applies to both B2B and B2C transactions. For distance learning, this is a clarification that is very important, where we have an online platform provider charging a learning institution a fee for use of that platform, we mentioned it earlier, to conduct learning, or if an entity charges a fee to access maybe a pre-recorded content, or if we have a customized package on online training where the trainer charges a fee to attend the classes online, then this will be subject to GST. So that brings me almost to the end of my presentation. I think we'll share these links because they're quite a bit. I don't know if I'll ask my team to share them on chat so that if you need to find more information, then you can access these links and you'll be able to get more information that will be able to assist you in view of time. So just to wrap it up, we'll just quote one of our sons. He said that what people really want is fairness. They want people paying their fair share of taxes. And that's a quote by former President or President Barack Obama. And with this, we come to the end of this presentation. I can see there was a lot of activity on chat, and I'm hoping that most of the questions were responded to. But yes, that's the end of my presentation. Thank you.
Wow, thank you so much, Hakamba, for that. I can see that you have answered the questions that I posed as we started. The what, the when, the who, when it comes to the digital service tax. And thank you, I see you have covered a lot of that. But before I start looking through some of the questions that we get, I have a question myself. So I want to pose like two scenarios, and here I'm also going to think about our platform, our e-marketplace that our chairperson introduced. So normally we have these like hosting platforms, like maybe if I have a website and then I invite people to come and maybe showcase their products, and some of the websites usually charge maybe a commission, like I can charge like 10,000 per day. So my understanding is that the digital service tax that I'm going to pay is from that commission, right? The 1.5 is from that 10, it's from that 10,000. So now we have an example of the Commonwealth Businesswomen Network e-marketplace where as the hosting platform, we are not charging, like it's free of charge. So we're inviting business women to come in and showcase their products, but they are going to be, you know, also selling, they're going to be selling their goods. So they're providing another service there. So as the Commonwealth Businesswomen Network in Kenya, since we're not charging anything, does that digital service tax apply to us? Do we need to pay for that? Although, because I know definitely the people who are going to come and showcase their products on our platform will be liable to the 1.5%. Yeah, that's my question.
Actually, you've given a perfect example of the scenarios we are looking at. So, so there's the first aspect where we have the hosting platforms, and you invite people to showcase their products, and you earn a commission or a fee from that. So for that one, I'd say, because what we are looking for in DST, the provision, you know, if you look at the traditional marketplace where people meet at Mudhurwa or Mtindwa, and the government normally, there's a fee that the government periodically collects. That's the scenario you're looking at. So if you provide such a platform and there's a fee that you're earning as a result of giving people that platform, then that is subject to GST. That's a service actually provided. given them the environment to be able to thrive in business. Now, the second one, again, for the Commonwealth business women, again, you're providing a similar service, but you're not charging. You're just giving your members an opportunity to showcase their products. So if you're not getting a consideration from this service, then you do not charge GST. So if you're not getting a consideration from it, if you're doing it for purposes of furthering, in fact, for the government, that's why some of these platforms were exempted, because we have like the T-Board of Kenya, for example, a good example. You provide that forum for your members to be able to thrive in business, but you're not earning anything out of it. Therefore, GST is not applicable.
Oh, perfect. But the members, the businesswomen who come in and showcase their products to sell, those ones are liable to the one.
So now let me just clarify on that. So these people dealing with goods, and these people are registered maybe in Kenya, and they're already subject to tax. Already they're paying their VAT, they're paying their TOT, they're paying their taxes. So when they're bringing their goods, DST does not apply to goods. So they are not subject to DST either. So they'll sell their wares. When they come to the period which they need to make their declarations, then they just do their normal VAT, they do their income tax, but they're not subject to DST.
Oh,
it's the platform owner who should be subject to DST.
Yeah. Oh, great. Oh, thank you. Thank you for that clarification. And let me look at some of the questions that we've gotten on the chat box. And so Joy is asking, does the digital service tax apply for not-for-profit organizations who are hosting online trainings?
Again, you know why we have the definition of DST talking about the consideration received or from income derived in Kenya when you are providing certain services that include the online learning. Then for online learning, remember I mentioned that if the owner of the platform is charging for using that platform, then in that case, like for example, if we have an NGO, you talked about an NGO that is charging the students or the people who are accessing that learning platform for use of that platform, or if they package some material in a way that for me, for example, that NGO has material that I'm really interested in, and they package that material, avail it online, and for me to access that information, I have to pay a fee, and then I get access to that platform. Then that will be subject to VAT, to DST, sorry. And I think there's a third category. I think I mentioned it in the Q&A. If you're packaging it in a way that you're charging for you to access this digital content, for example, you have content that someone just downloads and learns, and you're charging, then you need to pay DST. But for NGOs also, like you as now, when you're having this forum, you probably are not charged. I think you are not charging because many people are able to join. Then it's not subject to DST.
Thank you for that clarification. And I'm seeing there's more information that is being posted when it comes to some of the frequently asked questions. More information on the same has been shared on our chat box. So for anyone who'd like to
Susan, I have a question.
Yes.
Hakamba,
Yes.
Does the KRA have a department that deals with cybersecurity? Why I'm asking is I imagine that because now we've all moved online and we're trading online, maybe that is an area. Okay, you're not collecting tax, but you're giving a service in terms of creating a space for educating consumers on cyber security, the threats, expectations, and so on. Cyber education. Do you have anything like that?
Now, about cyber education, no, going out to the taxpayers, we may not have that. Okay, at least not advanced towards that area. It's interesting to note, but yes, we have a department that we have the intelligence department. Basically, it's our eye when it comes to cyber security. It's our eye when it comes to intelligence and cybercrime, basically, and we liaise very closely with them because some of the information that we need, especially to advance taxation of digital economy, they are the biggest support because they've been on it. Like I think it's been existing like for as long as I know. So it has had also to evolve, but basically, yes, we have that department that also liaises with our security agencies.
Yes, but I'm thinking of the consumer, your customers. I think it would be a worthy service to extend to your customers, because now everybody's moving online, and there are a lot of dangers in terms of fraud, in terms of reputational risk, and you do want your customers to stay in business safely. So this may be a good service to extend to your customers.
Actually, that's what I'm saying. I like your angle, and we are taking note of it. I think that's an area that we actually need to extend to, because apart from collecting taxes, we also create awareness. So we should pick up on that.
Thank you. Susan,
thank you very much.
Yes. So let me continue with some of the questions that we have received. And so, is the digital service tax chargeable to YouTube payments, which is paid to the content creators?
Yes, when you saw, when I was we were displaying the scope of DST. Yes, it includes, if you're monetizing, you know, there are two aspects of it. I think in the course of this week or last week, I think there's someone who was selling, I'm not going to name them, their Facebook account for 2 shillings per Facebook person. So I think that person was going to make about 2 million shillings. There's a reason why they can sell it, because they're monetizing. It brings them money. So for the money that you are making on digital content, yes, it's subject to yes. Because it's a service also. It's a service.
Yes, it is. And moving on, I can see Priya Shah, who's just made a comment in relation to the NGOs, and she says, similar to NGOs, are overseas not-for-profit organizations also exempt from DST? For example, a university providing online degrees to customers in Kenya, either via their own website or via a third-party online marketplace.
Okay. So again, break it down into two. So if they have it on their own website, you know, that's why we were saying that if they're charging, we'll still come back to, if they're charging their clients for use of that platform, then that whatever they're charging, it's a service and it's subject to DST. But again, we also have the same international universities packaging content. Again, for you to access that content, then you need to pay to access that content. Then as part of that service, then it's subject to DST. Now, what you need to note is the same. In fact, let's not even think of overseas universities, because even our universities have such platforms where they have such products that they package for sale, but they also have their daily classes that they've charged fees on, and they're conducting the classes and basically awarding degrees in the normal day-to-day business. So that's why we were saying that we have the traditional platform and we have the online platform. So if the university provides the online platform and is charging for use of the online platform, then that is, we're looking at two services. There's the use of that platform, then that service is actually subject to DST. Or if they're offering material at a fee, like the certifications that you're talking about, you can't access the material, the study material, without paying some fee.
Akamba.
Yeah.
My name is Penina.
Yeah, okay.
And I'm the one who's asking the question about when you're auditing, maybe you may need to guide us on the key areas to check. For example, because now, like when you're auditing an area, we check on the tax heads, like VAT, withholding, PAYE, and I believe DST is like another tax head. And so now I really want to understand. Now, when I'm auditing an area, how will I check on this DST? Like the way we normally check like VAT and the PAYE and those other tax aids. Kindly guide me. Thank you.
Okay, so thank you, Penina. So when you're looking at aspects of how to audit this, as you are listing the tax heads, you please have your eye on withholding tax, installment taxes, advance tax. How do you treat this, especially advance tax? So the same treatment you would accord advance tax payment is the same way you would pursue DST. Now, on that note, maybe you need to take note that when you are conducting the audit, you're basically making verification against maybe some certain control. Like if someone has made payment on DST, then you are looking at, but is that really the income that they earned in this jurisdiction? So we are looking at basically the visibility of the transactions bit of it. I think maybe Penina, that's what you'd be asking for, and that's an area that we are in the process of developing, because being a new area, even as we have been limited to the what we would say, how visible are these transactions, but we are working with the relevant parties so that we can be able to have the other side of these transactions, not only the payments, but being able to verify these payments. And I think that's where the problem, Penina, you're trying to bring out that how can you verify that the correct amount of tax was declared. So it's something that we are also working on. Probably the digital service providers will have the full picture, and we are developing modalities so that we too can be able to have the full picture. We have made a lot of progress, but we need to finalize it to the end so that we have a very good picture of these transactions, including actually the use of technology to access this information.
That's okay. That's okay, Hakamba. Thank you.
Okay.
Hakamba, I have a question. This is Joy. I just need a clarification. I have a clarification, and this is in regards to the digital service.
Mercy, you don't know Mercy is behind you.
No. There's silence on my side. I don't know.
Okay.
Maybe it is okay. So I'm asking in regards to the digital service tax. You're running. Supposing you're running an NGO that is offering online trainings. This is an NGO, so it is already tax exempt. Is it expected for it to pay the DST for the services, and it is higher education based?
NGOs pay income tax. They don't pay income tax?
No, some, okay, so they pay, how does this, I'm just asking based on my basic understanding. How does that work? Yeah.
You know why I'm saying NGOs pay income tax? Because it would bring us to that angle. DST, I'll still come back. We are talking about, I'm going to ask, I think, because I'll explain until maybe I'm not making any sense anymore. Perhaps
no worries. Yeah.
So I'll invite, I think, my colleague Caroline. Caroline is on this call. So once I explain, she can add if there's something that I may have missed out, or perhaps invite Caroline maybe to explain it.
Thank you, Hakamba. Good afternoon, everyone. I hope I'm audible.
Yes, you are.
Yes, you are.
All right. Joy, your concerns are around what? Whether DST is applicable to NGOs?
NGOs that are hosting online trainings. Let's say they're charging for services, that is one, or maybe if those trainings are funded. So, because you see, the people have to use the platform to access the trainings based on Hakamba's explanation. Do you charge 1.5%?
Okay.
Just explain to me what it entails.
All right. So if the NGO is conducting e-learning online,
yes.
And would this be conventional, what we call the basic education, like what we have now with our primary, secondary, and universities that moved their classes online? Or is this a specialized training course?
These are specialized training courses, but targeting higher education.
Targeting higher education.
Yes.
Okay, so if you're conducting the sessions online, let's say through your website, you see now the what you would earn from that would be the normal tuition fees for your students.
Yes.
right?
Yes.
So in such a case, DST would not apply, because
Okay.
it would only be applicable in a case, for example, if you're using any of these training platforms like the likes of Blue Button or Zoom, for example, to conduct your e-learning.
Yeah.
Such platforms would normally charge a subscription fee to use their platform for
Yes.
purposes of the e-learning. So
Yes.
in such a case, the fee that the e-learning platform, for example, now that Zoom would charge the learning institution,
Yeah.
that fee is what would be subject to DST, and it would be the Zoom or the e-learning platform provider who would be accounting for the DST and not the learning institution. However, in a case where maybe I could just put it in context, like we have certain, for example, the influencers who through their social media channels can require their followers or subscribers to pay a certain amount to be able to access their content. For example, if one has a cooking show or a weight loss program that they conduct online, or even motivational talks. So they tell you to access this content, you pay me a certain amount. So DST would be applicable in that case. So it's a kind of learning, only sort of specialized, not the traditional learning. But since someone is earning an income directly from giving people access to that content online, digital content, then DST would apply. So for the universities conducting their learning online, DST would not apply. It would apply on the platform provider who is earning a commission from giving access to the university, giving the university access to their platform to conduct the e-learning.
So if
I don't know if that clarifies. Yeah.
It makes sense, but then the question is, so Zoom is the one which is going to pay you the 1.5?
Yes.
Okay, so you have access to Zoom. So we as the subscribers
Yes.
to Zoom, we just are on the standby and we just use the service. Okay.
Yes, yes.
All right.
Okay.
I hope that's clear. Though we need to clarify also that some of these platforms are from, again, we said it's something that we are developing, that some are already in some of these platforms that we're using are subject to withholding tax on royalties. So some of them, especially for services that they're offering to other businesses, B2B transactions, then when these transactions are subject to withholding tax on royalties, then they're exempt from DST, the same platforms that are being used for e-learning. But then in other aspects, they have to pay DST because they are charging, like, for example, you and I accessing this platform, if you have to pay Zoom, then we might not be withholding for doing the withholding on royalties, in which case they need to pay DST.
Right. And I can see Priya just made a comment on the chat box saying that so DST would never apply to universities. I think after listening to Caroline, she just needs to be clear on that it doesn't apply to, to the universities. And let me just read another quick question from someone who joined us on Facebook. And what she says is that for boosting posts, when it comes to the small businesses, she realized that you charge a fee. I don't know if she means you. So what impact does charging / paying that fee have on the tax returns?
For boosting posts. Now, I'm going to be also in a learning curve, because what does that mean? Unless someone else understood it, I don't know what it means.
Yeah.
If you explain it, then I'll be able to tell you. Oh, the boosting posts. Maybe a member of our team, does anyone know the people who do social media? Does anyone know what that means?
On Facebook, when you post a product, you can boost it by paying a small amount that will ensure it reaches your targeted audience. as opposed to just waiting for people to come. When you pay, certain maybe $1 or whatever it is you're putting in, that post will be boosted to your targeted audience.
Okay.
Okay, I could. I think that would mainly be targeted marketing. I know the likes of Facebook do that.
Yes,
right?
yes.
You pay, you as the seller on Facebook would pay Facebook a certain amount for them to do that targeted marketing for you. If you'd want to reach a specific audience, like maybe women of a certain age from a certain region in Kenya, that type of thing. So that is considered digital marketing. And since Facebook is earning an income from providing that service, that digital marketing service, then DST would apply. But in this case, DST would be applicable on Facebook since they are the ones earning the income from providing this digital service. So as Hakamba explained in the presentation, DST applies to both residents providing digital services to Kenyans, and it also applies to non-residents, so the foreign entities, the foreign digital service providers, the foreign based platform owners who are providing digital services to us in Kenya. So in this scenario, the DST would be applicable on Facebook. At the end of the day, the bottom line is whoever is earning an income from provision of digital services online is the one to whom DST will be applicable. Yeah, thank you.
And maybe to add on that again, such a situation, now we are talking about boosting sales or something. In such a situation, if it happens between business to Facebook, again, same thing. If that happens, then if it's a B2B transaction, then it's subject, it's actually online marketing, online advertising. Then the person who is offering like that is paying like the additional costs for their wares to be displayed. If they need to withholding tax from Facebook, so they'll be submitting withholding tax to KRA. So that also needs to come out clearly. So if it's a B2B transaction, then it needs to be withheld as withholding tax. But you and I, again, on those platforms, when you don't have the avenue to withhold, then it's Facebook to pay the DST.
Right. And yeah, yes, Penina.
I have another question, Akamba. Is the turnover anywhere considered for DST?
No,
I mean the turnover like the other tax sales.
No, okay. DST does not have a threshold as of now. I'm going to say as of now. We said it's a developing tax. As much as we're implementing DST like any other jurisdiction, we also have our eye on what is happening in the OECD. So at some point, if OECD, and those discussions are there, if OECD comes to determine we need to establish a threshold, then we'll communicate as such. But for the time being, there's no threshold.
All right. And speaking of, the services that are being rendered online, so there's a question about, I don't know if you noticed during the COVID-19 period, there are these DJs who are entertaining people live on Facebook. And as they're doing so, they keep getting tips. They ask for tips, people send them tips. So there's a question that, do these tips actually attract DST, or are they just supposed to pocket that money?
So I remember that time, and I think I forgot to submit my tips. I actually just enjoyed that service. And basically, this is just a tip, because when these people are coming to, whenever you're going to charge for the service that you're offering, you come to the platform on the basis that I'm going to do this, but you're going to pay me this. In which case, that's the consideration you're receiving, that's the fee you're charging, that's the commission you're charging, which will be subject to DST. Where people feel generous and feel you've done a good job, then they forward you they give you something small, then it's a tip. It's not subject to DST.
Yeah, so they can just pocket that and can forget about it. So I have another question, and this one goes back again to the education scenario. So if a foreign university provides a degree via their own site, it would be exempt from VAT as education. That's she wants a clarification. And also, similarly, if they provide the same education via a third-party marketplace, would it still be exempt from VAT?
Okay, we'll come back to the same. The first part is true; it will be exempt from VAT. But if they're using a third-party platform, when they're using the third-party platform, they're going to be charged for use of that platform. That's correct. So when they're being charged for use of that platform, it's the host, the person who is actually allowing them to use that platform. Now, the host of the third-party platform is the one who is subject to DST because he's charging for use of that platform. Therefore, the host should be charged DST.
Excellent.
So on the service on the online learning, it's not subject to DST. But then if they use a platform where they are being charged to use that platform, then that charge is subject to DST.
A question here, Wangwe. Now, what's the expected impact on digital business? Is it likely to take it down? People get discouraged, and then the expected revenues also, you're not able to pick them up. What's your projection? What do you expect?
Okay. So basically, as I mentioned earlier, our expectation was to tap into this area which we had not previously been able to tap into it. And that's why when you look at DST, when we are talking about residents and non-residents with permanent establishment, because we already have them registered here, we know where they are, we can access them when it comes to compliance management. For them, we are calling it an advanced tax for 1.5%. The reason is it's for them to register their presence to say that I'm here and I've earned this income in this period of time. But come next year, we consolidate all of it and we give it to them as credit that when they are doing their tax filing for the whole year and they've done their accounts and they say, so this is my turnover and this is the tax that is due in corporation tax, we also give them back their DST because it's not supposed to have that impact. It's just for them to register their presence in that platform so that you're able to also do the tax-based expansion towards that end. Now, the area which I don't know if you'll call it discouraging, but it shouldn't be because it's a global approach, is for the international merchants. So for those who supply services here and are from other jurisdictions, then it's a final tax. So what really we are reaching out to say is that wherever you are conducting business, you need to pay your taxes. There's no place where you do your business, but then you're not paying any taxes, even in your own jurisdiction. For our own people, it's an advanced tax, so it should not have that impact that people are projecting to have. For international people, that's where we are having discussions because that's where the outcry is, because previously they are not being taxed, but then globally everyone is saying, but you have to leave a portion of the income you're making here. And especially the ones coming from the American market, they have actually cried out that it might not be fair, and people are on this table trying to discuss how best then do we do this, but you have to leave a portion of your income in that country.
Just an addition to the question, is this a global practice, or is the best practice from, or are we setting the precedent globally?
Globally, we would like to set the precedents, but fortunately, some other countries were ahead of us, especially in Europe. Europe especially, they were ahead of us, so we just following them for best practice. That's why we follow the discussions and the OECD very keenly. In Africa, we have ATAF that is also guiding us on how best to implement this. In Africa, we had some countries, I think Susan had mentioned, I think Tunisia and Nigeria, but many African countries like East Africa, they're actually coming on board very, very quickly to be able to tap into this area of taxation.
Thank you.
All right, thank you so much, Hakamba, for taking the time and your patience in answering all those questions. I think when it comes to tax matters, the questions never ever end.
Yeah, true. Yeah.
But as of this moment, we do not have any other questions. So what I'm going to do is that I'm just going to quickly remind all the participants about some of the programs that our chairperson mentioned at the beginning, because we are hoping that you'll be able to join in. So allow me to just share the screen very, very quickly. So next week on Wednesday, we continue with our discussions, and we're going to be looking at the Employment Act 2021 and its implications on your businesses. And our guest is called Sarah Kangari, who's an HR officer from the Kenya Pipeline Company Limited. She's going to, break it down for us, educate us for the ones who don't know. A quick reminder also on the Commonwealth e-marketplace that our chairperson mentioned. I shared the link if you want to join in. As a business person, come and showcase your products and, make money, do business. Karibu sana to everyone. Please share with all the women and also the youth in your networks. Not forgetting the Commonwealth Women's Entrepreneurship Summit on the 19th to the 20th of May this year. To join the summit is free of charge. And I think I have shared the same on the chat box for you to be able to register and join in. And we hope you'll be able to do so. These are our contact information. Follow us on Twitter, on Facebook. You can send us an email, info@cbwnkenya.org, and that is our website, cbwnkenya.org, to get more information on all those programs. So I think we are coming to the end of our session. Very, very happy that Hakamba was able to join us, and also Caroline Washuka, who joined in as well. And she's been able to answer some of the questions we've had on the chat box. We're very, very grateful to them. And at this point, I would like to invite another member of the Programs and Trainings Committee at the Commonwealth Business Women Network in Kenya to just give us the closing remarks and also to give the vote of thanks. So karibu sana Mweni Deliver.
Thank you very much. Thank you very much for this session and the time that you've had in sharing around digital service tax. This is information actually that many people have not been aware of, because one, either it has not been communicated enough for people to be aware about it, or they have just been ignorant. But ignorance is no defense. So when the law catches up with us because of not paying these taxes, then that will not be a good thing. Thank you very much, Hakamba and your team, for sharing this information with us, Commonwealth Business Women Network Kenya chapter. The members who have attended, thank you very much for attending in large numbers. And the non-members who have also attended the session, we thank you for coming, and we welcome you to join us in many, many other sessions that we will have. So thank you for the information you have shared. You've given us really complex information in a very, very understandable way. So we now easily and very well understand what our requirement is around the DST tax. Thank you very much. So now we know better, and we know where this particular tax can be charged or it's attracted, so that we can also be on the right side of the revenue tax side, or rather KRA side. We keep our tax information in the right what do we call? We are in clean books with KRA. Yeah, so we need to have those details checked and aligned with what we are mandated with as a country and as a citizenry. So thank you very much for coming. We pray that you will have a good time the afternoon, and that God will bless you. Asante. Back to you, Susan.
Thank you so much, Mweni. And yes, thank you for reminding us that we have to be on KRA's, the Kenya Revenue Authority's good books. So we're happy that Hakamba is here to educate us on that, to ensure that we're always on the proper lane. So thank you, everyone. And I really, really hope that you'll be able to join us next week on Wednesday at the same time from 1 p.m. And we'll be sharing all the details on all those programs on all our social media platforms. But the one that you really need to remember is our website, www.cbwnkenya.org. You'll get all that information. And yes, we'd like to wish you a very, very beautiful day. Let's continue to keep safe keep the social distance, sanitize, wash your hands all the time, get vaccinated. And yes, hope to see you all again next week. Bye, everyone.
Thank you so much. Bye.
Thank you. Bye, everyone.
Thank you. Bye-bye.
Thank you. Bye-bye.